Well, I think there is a possibility that the Fed will raise interest rates maybe a bit earlier than the third quarter of next year. After all, the unemployment rate has now come down to, it's not that far from the Fed's preferred range for the full employment level of unemployment, which it puts at 5.4 to 5.8%. So there would be a knee-jerk reaction. Normally, you see the Treasury bond market selling off some 3 to 4 months ahead of the first rate hike in the cycle. And there would undoubtedly be a knee-jerk response to equity markets, but that should prove temporary. We don't think it will be the end of the equity rally, although it will mean maybe negative returns from investors in US Treasuries and other G7 sovereign bonds for a while. Well, clearly what happens with the Fed is of great importance. It's probably one of the keys for the emerging markets. It will depend really whether we see a continued gradual scenario in which the Fed prepares everybody and inflation remains well behaved and you don't see signs of a big pickup in wages, then I think this is just one of a number of factors that is going to influence emerging markets. I think you have push factors and pull factors. Pull factors will be an improvement in the performance of the emerging markets, particularly on the corporate earnings front. So it's not necessarily as negative as people sometimes make out. It is something we have to get through. We know it's coming. And we would say probably the sooner the better, because it would tell us the Fed believes the US economy is healthier and stronger. After all, that's the reason why they're going to be raising interest rates. Well, I think the Argentina problem has been known about for a very long time. It's idiosyncratic. It is a tussle between the Argentinian government and the so-called holdout investors of the original Argentinian bonds from 2001. And I think the US legal decision is actually forcing this issue to a head. So at some point the uncertainty will be over. And professional investors in emerging market debt, I think, look relatively favorably on Argentinian bonds at 8.5–9%. So I think this issue will actually be resolved, and I don't think Argentina is seen as a systemic warning to other emerging market debt markets. Well, the Russian economy has experienced tremendous capital flight, but then the central bank does have very, very large reserves. Certain financial areas, certain banks will find their operations more difficult, so the sanctions are not helpful. But the Russian economy is essentially in recession anyway. I think that there will be an end to this at some point and a normalization of relationships. So I think for really long-term investors, the cheaper the Russian market gets, the more they should be looking there for long-term value.